All right, so we're going to take a deep dive today into the intersection of politics and market trends.
Okay.
And we're going to be looking specifically at some excerpts from an article titled S&P 500 Dips, Trump's Market Disengagement.
Okay, sounds good.
And this is fascinating to me because, we recently saw the S&P 500 dip to a 6-month low.
Right.
And that's the, big index that tracks 500 of the largest U.S. companies. And it's often considered a bellwether for the overall market.
Exactly. Yeah.
And so normally a dip isn't, that unusual markets go up and down.
Sure, of course, yeah.
But what makes this particular dip interesting is that former President Trump made a statement right around the same time. And it was basically, don't watch the stock market.
Interesting.
Almost like he's saying nothing to see here, folks.
Right.
So I'm curious, what are your initial thoughts about the timing of that statement?
Well, I mean, it's certainly an interesting coincidence.
Yeah.
Was it just a coincidence or was there something more calculated behind it?
Right.
You see, back in the 1980s, President Reagan faced a similar situation.
Oh, okay.
When the market took a tumble and his administration, they kind of downplayed the significance, assuring the public that it was just a minor correction.
Right.
And interestingly enough, the market rebounded relatively quickly.
Wow.
Now, whether that was due to Reagan's calming influence or other economic factors, that's debatable.
Yeah, it's hard to say for sure.
Exactly, yeah.
So let's dig a little deeper into this S&P dip.
Okay.
Is a 6-month low really cause for concern? I mean, what kind of factors could be contributing to this?
Well, a 6-month low certainly suggests a downward trend,
right,
but it's not necessarily a reason to panic in and of itself.
Okay.
We need to look at the bigger picture.
Right.
For example, were there rising inflation fears at the time?
Yeah, could that be a factor?
It certainly could be. Remember, when inflation goes up,
yeah,
companies, they face higher costs,
right,
which can eat into their profits. And then investors, they get nervous, and that can lead to sell-offs and things like that.
Yeah, so inflation could be one piece of the puzzle here.
Potentially.
But let's go back to the former president's advice.
Okay.
To basically tune out the market fluctuations.
Right.
Could that kind of statement actually impact investor behavior, even if it's indirect?
The market is like this giant mood ring reflecting the collective anxieties of millions of investors.
Oh, that's an interesting way to put it.
And a statement like that,
yeah,
even if unintentional, could feed into those anxieties.
Right.
Imagine you're an investor and you're already feeling uncertain about the economy.
Right.
Then you hear this, prominent figure telling you to ignore the market.
Yeah.
That might just push you to hit the sell button.
Okay, yeah, I can see that.
Yeah.
But you'd think that, savvy investors wouldn't be so easily swayed by political rhetoric, right?
You would hope so.
Yeah.
But, even experienced investors are human.
They're
influenced by emotions, just like everyone else.
Right.
And let's not forget, this isn't just any figure making the statement.
Yeah.
This is a former president,
right,
someone who has historically been very vocal about the economy.
Yeah.
So that carries weight whether we like it or not.
Okay, so what does all of this mean for the average person out there?
Right.
Someone who's planning for retirement or just trying to make sense of their investments.
Well, I think it underscores the importance of staying informed and thinking critically.
Okay.
Don't just react to headlines or pronouncements from influential figures.
Yeah.
Dig deeper.
Yeah.
Look at the underlying economic indicators.
Yeah.
And consider multiple perspectives.
Okay, that's great advice.
Yeah.
So while there might not be a direct link between the former president's statement and the S&P 500 dip, it definitely adds another layer of intrigue to the story, right?
Absolutely.
Yeah.
It reminds us that markets are influenced not just by cold, hard data, but also by human perception and emotion. And sometimes those two things can be very deeply intertwined.
Yeah, that's definitely food for thought. And for you, dear listener, the next time you see a headline about the market, just ask yourself, what's the real story here?
Exactly.
What factors might be at play beneath the surface?
Right.
The answers might surprise you.
They might.
Until next time, happy diving.
Yeah, take care.